Mortgage rates are falling, and that sounds like good news. But this is the exact moment many UK homeowners make a costly mistake. Because the biggest risk right now isn't fixing too early, it's waiting for the perfect rate that may never arrive. Fixed mortgage rates have dropped back into the mid 3% range. That's happened because markets expect interest rates to ease gradually, and lenders price those expectations in advance. In other words, a lot of the future good news is already reflected in today's fixed deals. That's why waiting now isn't neutral. You're trading certainty today for the hope of marginally lower rates later, and that trade-off often gets worse the longer you wait. This is the same mistake investors make. They wait for the perfect moment and miss the sensible one. Smart money decisions aren't about perfect timing. They're about avoiding bad outcomes. So what's the sensible move here? It depends, but not as much as people think. If you value predictable monthly payments, don't have much slack in your budget, or simply want peace of mind, fixing now is a rational choice. You're not trying to beat the market, you're choosing certainty. If you have flexibility, expect your situation to change, or are comfortable with payments moving, shorter fixes or trackers can make sense. But waiting purely in the hope of much lower rates isn't a strategy, that's a bet. For most people, the sensible default in this market is managing risk, not trying to time the bottom. If you want calm, disciplined thinking about money, subscribe to Smart Wealth Plan.